If you hate missing successful supply and demand zone trades because you didn't see the right signal or just missed whatever entry pattern appeared inside the zone, get ready, because in this video I'm going to show you how to get a late entry into a zone. There's a simple signal that appears just before price reverses from a supply and demand zone that you can use to enter late if you miss your initial entry. I'm going to show you what this signal is, why it makes such a great late entry signal, and how to use it in your trading. Sound good? Let's take a look. So the signal I'm talking about is of course large range candlesticks. Yes, the same large range candles I mentioned in my secret entry video earlier. These candles almost always form just before price reverses from a supply demand zone, making them amazing signals we can use to get a late entry into our trade. See for yourself. Look at how price reversed from this supply zone. See the large range candle here? This reversal only got underway after this bearish large range candle formed. It signalled the start of the new downswing and was followed by two other big large range candles forming immediately after, pushing price lower and initiating the meat of the decline. So if you missed the pins or engulfs that formed inside this zone, you still could have entered using this large range candle and caught the reversal. You can see it's the same situation for most supply and demand zones. Just before the main reversal gets underway, a large range candle forms. The candle signals the start of the rise or decline that causes price to move away from the zone and is usually followed by 2 or 3 additional large range candles. In my secret entry video earlier, I explained how large range candles make great additional entry signals because they reveal when the bank's positions have totally overwhelmed the other side, making a reversal likely. Well, they make great late entry signals for the same reason. They show the banks have overwhelmed the other side. It just happens in a different location, at the source of the main reversal. Here's an example. See how price formed a pin bar followed by an engulf inside this supply zone? These form due to the banks entering their sell positions to make price reverse. Price jumps lower because the banks sold a large amount, causing a sharp decline and creating the pin bar and engulf. Now, if we move the chart forward slightly, you can see that just before price fully reverses, a large range candle forms. This candle sets off the main reversal, with 2 additional large range candles forming right after. Why is the large range candle formed? Because the banks sold again to initiate the main reversal. They know that by selling now, when everyone long is on edge about which direction price will move in next, they'll push price lower. That'll cause many of the current longs to close, as now they'll be losing money. That in turn will cause price to fall further, because how do you close the losing long trade? By selling what you bought. So when the longs sell, which happens as price falls, almost like a domino effect, price gathers momentum and falls further and further. That's why we see additional large range candles form after the first. It's the longs closing their losing trades. As price falls further, more and more longs are put underwater. Their loss increases, which causes more to close, creating the big large range candles we see. So the reason large range candles make such great late entry signals is because the candle marks the point where the banks buy or sell to initiate the main decline. By entering at the same time, we can get in right at the point where most retail traders are going to close their losing trades and generate the main meat of the reversal we see. Using a large range candle to get a late entry into a supply demand zone trade is extremely easy and really not that much different to entering using a pin bar or engulfing pattern. Here's a quick example. Let's say you missed the entry into this demand zone. For whatever reason, you missed the pin bar and haven't got in. What you would do is wait for a large range candle to form. That'll give you a late entry. Jumping forward, a bullish large range candle forms as price leaves the zone. This is your signal to get in. The large range candle reveals the banks have bought again, so by jumping in now, you can get in right before the meat of the reversal begins. Like our typical entry signals, you must wait for the large range candle to close before entering. Do not enter whilst it's still forming, wait for the next candle to open instead. Now, where you place a stop using a large range candle entry depends on where the candle forms in relation to the zone. If the candle is almost half in, half out of the zone, put the stop in its usual location, either above or below the zone. If the candle forms out of the zone, like it does in our example, and price moves a large distance away, put the stop above the highest swing high or below the lowest swing low created by the reversal out of the zone. For supply zones, put it above the highest swing high. For demand zones, put it below the lowest swing low. Large range candles, especially big ones, are usually followed by 2 or 3 additional large range candles right after. So when a big candle forms and pushes price far away from a zone, it's pretty safe to get in because another 1 or 2 large range candles are likely going to form. We don't need to put a stop above or below the zone because price probably won't return now the reversal is underway. In our case, after the large range candle forms, the momentum picks up and price rises heavily, just as we expected. All that's left for you to do now is take profits and close the trade once you see the right exit signal. Simple. So that's how you can use large range candlesticks to get a late entry into supply demand zone trades. If you happen to miss the pin bar or engulfing pattern entry, watch for a large range candle to form as price exits the zone. It'll allow you to get in just before the main meat of the reversal gets underway while still keeping your risk relatively tight. And now onto our final video.